Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. Today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Disclosures are very important. Trading stock and options involves risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. Right, again, the goal is to become disciplined trader. Trading psychology is important. Confident trader, that requires repetition, and from my perspective, requires doing things in writing and treating trading as your own business, where you have rules, right? You have a trading plan or business plan, operating agreement, and then you have your quarterly, monthly, annual goals for your trading account or similar to business. And then you have rules in terms of risk management, or every time you're trying to raise cash for the company or you're spending cash in the company or in your trading account, you have to have checks and balances, right? You have your QuickBooks where you keep your cash flow, right? You look at all your expenses or look at all your gains. And so trading requires same approach, right? Very similar approach. So in terms of trading plan for your trading account, I encourage you either consider one-on-one coaching, where one of our coaches can actually help you writing detailed trading plans specifically for you, because everybody is different, right? Or just try to modify some of my trading plan that I'm using. So for me, I always look at the cash. I still think it makes sense to raise cash. September so far has been, we're approaching September, October, usually volatile when everybody comes back from vacation, right? After Labor Day weekend, volume picks up, and then volatility can also pick up, right? Because fundamentally nothing has really changed them. All right, Fred, thank you. Nothing has really changed. So yeah, Fed is going to lower interest rate in September, but the probability of that event hasn't really moved that much. 50 basis point pay cuts is still relatively low probability. Most people will probably be surprised if it's a 50 basis point cuts. Earnings season is behind us. We still have Nvidia tomorrow, so that's probably the last meaningful earnings until the next season starts in October. So the door is open for macroeconomic events. We've seen inflation, like in PPI data, still an issue. Unemployment data continues to cool off and potentially can, Powell acknowledged that the risks are to full employment now, and those, that data can start moving at a higher rate. So those are the risks to the markets. I propose still, potentially hedge your portfolio and raise cash. If you were 30% in cash in April or May, maybe now it makes sense to be 50% cash. If you were 10%, maybe now it makes sense to be 30% cash. And the second rule in portfolio, in my trading plan, would be a portfolio drawdown. And again, these are the rules in a trading plan, right? Probability of success versus return on capital, right? You need to decide, are you looking for high probability of success trades, right? You selling out of the money puts on Bitcoin, or are you looking for high return on capital, right? You buying out of the money calls on Bitcoin was the idea that you wanted to have a higher return on capital but smaller probability of success. So that should also go in the trading plan, right? How you manage position entry and exit, some of the rules, right? In terms of 2.5%, maybe don't exit, if the trade goes against you, don't exit it in the middle of the day, wait till end of day. So there's some rules, right, that I also specify for your position management. But the most important is number of positions. I propose 4 if you start when you're new to trading. If you're experienced trader like John, Fred, okay, you might have 8 position, 15 position, but you're a broker, you pass your licenses, and my daughter actually passed Series 7, Fred, yesterday. I'm super excited. I think she's doing 63 in the next couple of weeks, and she'll be fully certified financial analyst, so that's exciting. But anyway, you have more positions. Sorry, you can have more positions, but you're an experienced trader. But if you're new and you start trading, then in general, 4 positions, 2.5% of account value at risk. A lot more time. Now I would move to, think about October, November contracts, not September. There's only 3 weeks left. And then allow more space, right? If you look at the 50-day moving average, maybe look at the 200-day moving average, right? If you look at 1 hour chart, maybe you look at the, instead of yesterday's low, you look at the week low. Series 7, Series 8. Okay, that's good. Yeah, 63, 65. Good. Look at the ABC pattern. Wait till end of day to make trades, right? And do not sell naked options. Those are some of the rules. Trading psychology is important, right? Emotional intelligence, being self-aware, not only predicting what the market is going to do, but more important, predicting what you will do, right, when the market moves against you. Yeah, right. At what point you will exit, how you will react, right? So if you can predict your own behavior in the future, then that can help you with position size, right? Because ultimately it's all about position size, right? And your exposure to the market. Everything else kind of falls in place. There's a lot of signals we can trade and ideas, but managing position size, that's the, what's the right word? Holy grail of trading. Okay, but anyway, so stock forecast toolbox, support 639, overhead resistance 648, still negative trend despite the rally on Friday. Market model thinks we're too far, too fast. I mean, can we make new highs? Maybe 647, 650, but we can revisit the lows as well, 635. So last week low is 635. That would be if you're aggressive short-term trader, I would consider buying, right? If we revisit 50-day moving average on QQQ, then potentially this is a buy. And then at 650, I would trim the position. Right? So that's stock forecast toolbox so far. I mean, you can see neutral, more or less. If you look at the close prices, when I see 642, 636, 644, still model things that we just choppy market trading sideways. Okay. What happened? So let's look at the chart. Oops, sorry. So maybe, at this point, gave up probably half of the gains from Friday, right? We're halfway distance between last week low and last week high. So kind of a flip of a coin, oversold short term. So I'm looking at SPX, right? 6,400, right? 6,380 last week low is important. Friday is open, right? This is an important level. So as long as we're above, we're below 6,500, right? That's the higher open interest, but next level is 6,400, right? 6,400, and Friday's low would be support. If you look at the SPX, give me 1 second. So the gamma is 63.50, right? So that's last week low. So 63.50, and the put wall in terms of open interest, highest open interest at SPX is 6400. So that's your key support and resistance levels, right? 6400, if you're short-term aggressive trader, I would consider to be a buy. And then somewhere in here is your support number 2, right? Last week low and 6300. Right? So those are very, I mean, if you're aggressive short-term trader, I would consider buying this. And then and 6500 is resistance number 1. So this is the overhead resistance, 6500, and this is the main support, 6400. Again, you can buy an SPX, so SPY just divided by 10, so 640, 650. So if you're buying right at this level, I would still use 1% stop loss. VIX is back to 15 level, 14 level. So I think market, back to 1% move. So I would use 6 points if you're doing day trading as your stop level. And if you're doing longer term trading, I would use maybe 2%, 12 or 18 points, right, at this point. So let's just use 12 points. So if you're thinking about a couple weeks, a month, right, I would use last week low. So 12 points, around 2%, and then if you day trader, 6 points. And then on $10,000 account, again, 2.5% would be $250. On $5,000 account would be $125. And then you just divide it 250 by 12. Right? You can buy 12 shares of SPY or buy 250 divided by 6, what is it, 40 shares, roughly. So 40 shares, 12, right? And you just do division. And that's how you determine position size, and you would do it for all 4 positions. This way, your maximum drawdown is 10%. Any questions? All right, in terms of market, we open SPX. For now, I mean, it's below 6450, right? And it's above 6400. So for now, kind of not going anywhere. Nvidia is flat, going into the earnings tomorrow. Bitcoin continues to deteriorate, so I am watching Bitcoin. So it broke the 50-day moving average, day 1, day 2. This is where, by end of the day, maybe close the credit put spread if you still have it, but that's a sign that it's a kind of a risk-off day, risk-off time, right? Not, if usually Bitcoin is leading the market, right? It's same thing happened in April, right? It starts selling off earlier than the market, right? And then the market follow into April lows. So it looks like maybe potentially similar setup where Bitcoin is leading the market. So I would be careful, kind of wait for these pullbacks before committing a lot more capital. So Bitcoin continues to deteriorate. Fred, Johnson Johnson, excellent dividend for today. Thank you for letting me know. Yeah, so Johnson & Johnson is one symbol, right? So it pulled back after the ex-dividend. Thank you for letting me know. And then let's look at the rest of the signals. Elmar, good morning. Prosser, good morning. How are you? Happy Tuesday. So 10-year yield is glued to 4.3. No new changes, so that's good. Dollar is oversold, but still stable, not dropping. One of the reasons, earnings are better than expected could be attributed to weaker dollar for the multinational companies. So that's kind of causing some of the better earnings in industrial or multinational companies. And also weaker dollar is good for emerging market, right? If you look at the emerging market chart, it's just continues to grind higher after Liberation Day and outperforms the market. China and Hong Kong, Japan, kind of in this basket. Vietnam. So that trade is still on kind of emerging market due to weaker dollar and persistently staying the weaker dollar. What else? VIX is 15, slightly higher than Friday, but still it's pretty low. Value stocks pulled back yesterday, right? We'll see if it's a confirmed breakout or if it's a false breakout, right? Because equal weighted S&P, RSP, same price pattern, kind of give up most of the gains from Friday, right? Give up most of the gains for Friday, and if it's a false breakout, right? Like if it rolls over like Bitcoin, that's also, that also could be an issue. Spiders are flat, small caps so far doing better, still confirmed breakout 3 days in a row above August 13 highs. So we'll see if that trade stays on. Gold miners are up today, continues to grind higher. So gold miners are outperforming. Germany kind of consolidation. We had a pullback in consumer staples yesterday, right? Sharp pullback consumer staples, kind of selling the safety asset class. I think utilities pulled back yesterday as well, below Friday's low. Metals and miners, strong rebound. They continue to lead the market. Crude oil is down. Crude oil continues to be weak. That's about it. Yeah, Bitcoin, I'll probably close by end of the day my Bitcoin put spread as well. I agree, Fred. That sounds like the right decision. All right, in terms of the rest of the stocks, let's look. So SPX not going anywhere. Triple M. This was a trade from yesterday. So let's look at that. All right, so we have Johnson & Johnson. This is a paid program, Johnson & Johnson, rig. So that's a paid program. Keith will talk more about that tomorrow. But Johnson & Johnson has been a strong uptrend, right? I mean, healthcare did pull back yesterday, so it's kind of at least pausing, but it did look like it broke out of this channel. So I like healthcare, and personally I like Johnson & Johnson. I mean, we'll see what happens by Friday. And then oil rig. Again, it's an ascending triangle trying to transocean, right? Trying to break out, right? But you need volume, right? But for now, it's kind of stuck in the channel, right? So that's transocean. Tesla. So I'm trying to close the Tesla, right? Because we had some brokerage issues. Everybody was executed at a different price. I'm trying to just break even at 420. But if you got in at 380, 360, right? Everyone had different cost basis. I would consider closing Tesla, right? It was a good trade. It got to 350, right? It's also trading in this channel. Now it's in this channel. But 350 was the highest overhead resistance, right? When we looked at Tesla, and it wasn't able to break that last time. So I'm not sure if in September there will be a breakout. Probably not. So at this point, I would either trim Tesla or close Tesla. It's in the money spread, so I'm not sure if it's really urgent. But something to keep in mind that there is an overhead resistance at 350 call wall, right? And it's been for a very long time. This is the highest position in Tesla, even before the earnings. So I think it would be difficult to break through the 350 level. Meta consolidated the 50-day moving average, right? So 50-day moving average has been a good support so far, not going anywhere. So 760, 765 spread in September, 765. So we need a bounce, right? Maybe Nvidia after Nvidia earnings, right? This AI theme, I think, will set the tone, right? If Nvidia can deliver strong earnings, I think the AI stocks like Meta, Palantir, right, they can bounce. But so far, pretty weak rebound in some of these AI names. What's the other one? C3 AI. It looks pretty bad. All right. SMCI. So I don't know if any AI names look extremely strong. Doesn't look like. And Microsoft's similar. I think it's kind of stalling, right? So below 50-day moving average. So you can see market, kind of is on the edge, not a strong rebounds in these names. So maybe if you have a lot of exposure to Meta or Tesla or an Nvidia, I would maybe trim some of these positions because you can see, Nvidia has to deliver strong earnings to break through this consolidation and kind of a short-term downtrend in some of these names. So that's Meta, 760, 765. Probably after Nvidia, I have to make a decision, either close the spread. So September, that's what I'm concentrating on. We have 3 weeks left, right? Market is choppy, so you need to trim this exposure. Same thing, Tesla. We talked about Triple M, right? That was a new trade, but that's October, so I have time, right? And it's about 50-day moving average, also consolidating. So for now, there's no new signal, and still have QQQ put spread 550. It's not down 50%. I would wait for Nvidia earnings, right? We're either gonna be at 560 after Nvidia earnings, or we're going back to 580, right? So if it's 580, okay, then I'll close the QQQ hedge, but Tesla and Meta should do well. If it pulls back to 560, then at least I have a hedge position to mitigate some of the risk. So far, spiders are flat, not going anywhere. Semiconductors slightly higher. Small caps slightly higher. Nvidia slightly, India. This is India. Nvidia slightly lower, 18 basis points. So it looks like tech is pulling back today. And SPX is basically flat. Any questions? That peak at Boeing, industrials slowed down. Boeing, let's see, GE, Triple M. very similar price pattern, right? I don't see a lot of difference. XLI in general. So I think it's consolidating. I think the risk is to the downside, right? A lot of it will depend on. I mean, some of it depends on Nvidia earnings. I don't think it's going to be a big event. I think bigger events are going to be macroeconomic data, and the next data point that I'm concerned about is next week unemployment data, right? Last, July data wasn't great, right? It kind of spooked the market briefly. But that's one data point. You have two data points, and then right, in terms of job openings, that could, if we have two data points, then that could be an issue, right? So, I mean, if this was just a one-off, then great, and if still strong employment data, then I think market will continue to kind of grind higher. But if the employment comes in weaker than expected, you could have, that's why I think the risk is to the downside, right? Because any of these data points, whether it's employment or CPI, PPI data, then the following week, that would be, market will react. Market would react to these. But, that's not till next Friday. Yeah, right now I would, again, raise cash, review your positions, make sure you don't get caught off guard, like maximum exposure is 10%. And, keep a hedge, at least for QQQ, I'm still holding the hedge, and then make a decision. From seasonality point of view, right, we talked about seasonality. Usually in the past few years, and in 2018, right, there's very high correlation to the historical moves, highly correlation to the 2018 when the first administration, right, for Trump's first administration, where they start raising rates in 2018, not rates, but tariffs, there was a pullback, right, September, October, right? So August actually was okay, but usually September, after that third Friday, right, because of the positioning, people are hedged. So I don't think till next Friday, I mean, not next Friday, but September expiration, right, third Friday of September, I doubt we're going to break 6,300, 6,200 level, right, because we revisited, people bought puts, they're holding them, right, like Vlad does. So it'll be hard to break through these levels. But, as you can see, nobody's hedging October, only 11 billion, so very low. September, 77, 80 billion, so it's growing. But so I think as long as this hedge is on, then market is stable. But once this is removed, and assuming October is still a low hedging activity, then that's when the market is vulnerable. All right, any questions? All right, let me add Johnson & Johnson and Rig. Oops. I don't know if you guys have a question. All right. Johnson Johnson, Rig, okay, SPX, JP Morgan. So we didn't talk about it. And JP Morgan's similar, right? It's kind of this ascending triangle consolidating, either going to break out to the upside or, kind of, even though it's a bullish price pattern, could break to the downside. But for now, it's walking on the 50-day moving average. Any other questions? All right, so let's see. Let's few minutes left. Let's talk about earnings. Well, Nvidia is one. Let's see, Tuesday. What do we have before? Bank of Montreal. How's Bank of Montreal doing? If friends were are doing well. Bank of Montreal is breaking, so that looks good. How about Bank of Nova Scotia? BNS. Yeah. All right. So and that's the theme, right, throughout the world, where Canada or Europe or United States, if banks can continue to go higher, then globally, right? If you look at all the countries, we're still kind of a strong bull market. It's just next couple of months could be choppy market due to seasonality. But that looks good. Anything else interesting? Not really. Not really. Right. So banks, I like financials. I think whether it's in Europe or Canada or United States, that's different. Here's the headquarters of Bank of Nova Scotia. Oh yeah, that's Toronto, 1832. Okay, so Canadian banks are doing something right. 1832. Okay, learn something new. All right. Text me. Sure. Okay. Six. Thank you, Fred. Appreciate it. All right. All right. So after market, we have Okta, right? Yeah. Security, package software. Doesn't look strong. Looks weak. How's the volume? 3 million shares. So let's look at the position Okta, see if it's anything we want to explore in terms of, not the most liquid name. Let's see if there's anything stands out in terms of puts and calls. Well, it's a 10% to the downside. You do have 80 strike, pretty large 80 strike. 90, 80 strike. Let's see, is there any premium in these puts? Let's see, should be a lot of premium, right? So let's look, long put.
Well, you have to pay to get down here, but part of the reason that I ride is because I don't want to pay to get down here. Plus, I like just riding, but man, that was always a benefit. It's like, oh, I don't have to pay, Trying to find every angel I run running out of options with the.
Okay. So let's go to puts. So a lot of positioning is in that 80 strike. Well, highest hedges. 80 put. Let's see, next Friday. So 81 put. I mean, you can get almost 2%, right? 2%. And that would imply, let's see. Let's look at the expected move and put call ratio.
Yeah, I saw that.
It's about 12% move, 14% move. To 80 strike. And in terms of put call ratio, let's see how people are positioned. So this week expiration, kind of equal, slightly higher call volume. Monthly slightly call volume, higher call volume. So people kind of neutral, they think it's overdone. So maybe you can sell. I mean, you don't need 80, you can probably even go lower for that put spread. Let me look at that. Let's see. Let's look at the position. And then how did it go? So it's been up 20%, down 60%. So it's kind of all over the place. So you have 80 strike. You also have, I mean, call spread 100 is the highest. Next one is 105. So let's see. It's 5. Let's see. So you can buy 105, 110 spread. You know, kind of target this range between 105 and 110. 76 cents, 80 cents. You can go to the next week. With the assumption, you know, you're gonna have either move to the upside or to the downside, like 17 or 20%. Vertical put spread, same as 20. So let's see, 80, 85. So targeting 80 strike with a 1 standard deviation. It's about 11 to 14% move. And again, so, I mean, if you think it's gonna move only 5%, then you would sell premium. But if you can, if you think it's gonna move 16 to 20%, then looks like expected move is a lot less. So then you can target these spreads. Any questions on Octa? So that's after the close on 26. So this is after the close today. After the market close. What else is interesting after the close? Probably that's it for today after the close. I mean, MongoDB, but if this is a 3 million, MongoDB is not the most liquid stock for earnings. I mean, 2.2 million. Also very volatile stock. Let's see. See for instance out here, MongoDB. It's about 15 to 20% expected move. You do have a lot of positioning at 250. Highest position is at 250. And then MongoDB, let's see. Expected move. Let's see. MongoDB expected move. I mean, kind of same setup, right? It moves. The expectation is 16%, but it moved a lot higher to the upside and to the downside. Let's see what the put and calls it also neutral. And a similar setup. It's pretty equal. Calls on September a little bit more, 25% more. Here it's similar. I think MDB is kind of trading a downtrend. These are earnings. Let's look at the quotes. Last earnings Okta got cruised on excellent program. Thank you. I mean, these are all volatile technology stocks, right? Kind of a 17 billion company. It's not small, mid-sized company. Let's look at the quotes. All right, so let's see MDB. So 250 strike. A lot of people are excited about 250 strike. So 250 to 60 strike. You can buy it for $1.93. And in terms of puts, you have 200, but that's too close. So 180. Right, let's see, 180, 190. So 180, 170 would be a strike. 180, 170, same thing, $1.78. So you're asking, I don't know, $4 to make $6. If that's standard deviation. All right, any questions on Okta and MDB? We're not disclose Okta got crash. Is back behind bias rating ahead of earnings. All right, thank you, Fred. XMFF security deal terms were not disclosed. Thank you. All right, guys. Keith will be back at the closing bell, so please join us. And then tomorrow he's going to do the live trading room in the morning. I'll do the closing bell. And so far, market kind of flat, right? SPX flat, Triple M flat, JP Morgan flat, Tesla, Meta, Nvidia, all kind of trading sideways, except gold miners. Gold miners looks like continue to break out. So we'll see if silver will follow this suit. All right. Thank you very much. And I will see you tomorrow morning. Keith will be at the closing bell. Thank you. Brad, thank you for the book. All right, guys. See you later.